Greetings, Dr. Jeffrey Scott here. This is my weekend market update for May 31st, 2025. I am sitting at what is known as ASCO, the American Society of Clinical Oncology, which is an annual meeting of cancer doctors where the individual drug companies, biotechs, the universities working with them, and others present updates of their data. So it is not to be surprised if we see volatility to the upside and downside early in the week, as there's been a lot of data presented here. Speaking of volatility, we saw some on Friday, and I entitled this week's market update, Tariff On, Tariff Off. I think back to Karate Kid, wax on, wax off. It's kind of like Trump's version of Karate Kid, because that may have been a cool thing in the movie, but the market doesn't like these flip-flops. And we saw how even a court case overturning, originally ruling that the tariffs were not constitutional and beyond his powers, markets rally, and just as quickly, an appeals court overturned that, and the markets came back. So until this sorts itself out, I think we should be prepared for more of that volatile movement. For those that don't know me, I'm a cancer doctor by training, an entrepreneur in healthcare technology for my day job. And what my big passion is trading the markets. I've been trading the markets for 30 plus years. I am an active investor. And my time frame is days to weeks and sometimes longer. And I love to teach. So thanks for joining me on today's journey. Again, my email address, hdsidoc@gmail.com or marketmripro@gmail.com. And my Google group is called Top Down Trader. Let's get the disclaimers out of the way first. This is for educational purposes only. Anything I recommend should be taken in the spirit of education and not investment advice. The intent of the video and all the videos that I do is to demonstrate the tools of top-down analysis and how I apply them. Today we'll be using Market MRI Pro. Believe it or not, about this time last year, one of my followers and I got together at the meeting I'm going to mention, talked about things he could do. He had built this great indicator set for me in TradingView, and then lo and behold, he built Market MRI Pro by himself. It's been a great experience. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention in the report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools for multiple platforms, and they have an independent trader. If you're looking for wealth charts, I'm sorry I didn't get one this past week. With this meeting and my day job, I was swamped, but I'll have one up before the markets open on Monday. Wealth charts is another program I use. My indicators and scanners are pre-programmed in there. You have to purchase a marketplace add-on for the scanner, but it's one that I still actively use. I've talked about my Orange County meeting. I'll go to this one here, June 6th through 8th. So we are a week away. If you're an attendee, I will get an agenda out to Greg sometime today or tomorrow. I have just been swamped. Assume we'll be starting at 6 o'clock PST on Friday morning at the Residence Inn, which is 9 o'clock East Coast, obviously, and I'll be living on East Coast time, so it's okay with me. I'll talk about how I prepare for the open. And then we have on Saturday, if I get my everything correct, we have Dan Fitzpatrick and John Person speaking. And on Sunday, we'll have Chris White, Matt Caruso, and I'll be filling in most of the other time. So you get $400, 5 speakers, 3 days of education. And just to show how much I appreciate those that attend, even though I'm not holding the meeting, Greg is, Greg Mills at GAM72054@AOL.com. I don't get paid for my time. I don't get paid for my travel, although they do cover my hotel for transparency. But I'll even give you your $400 back, and I'll give you a $100 discount if you join Top Down Trader for up to $500 off Market MRI Pro for those that attend the live or online. If you would like that deal, because you're thinking about Market MRI Pro, sign up. And what you'll find is you'll get the video recordings and my PowerPoints, whether you attend online or not. My Google group, this serves as my mailing list. It's the only mailing list that I keep. Just go to Google Groups, log in, put in top-down trader, 3 separate words. You can join my group and participate in the dialogue. Recession in our near future. Well, for those that follow me, I think you know what my opinion is. There's always a recession in your future. These gray bars represent the major recessions. They occur after we invert the yield curve and cross back over, typically invert and cross over, invert and cross over, invert and cross over. Well, we've inverted and crossed over, but we haven't had a recession yet. It seems to happen every time you do that on the 2 or the 10-year, but no one says when. Down below, you could see during times of recession, again, those gray bars, the credit tightness spikes. We're not seeing a spike, we're seeing it come down. No evidence of recession. And then the recessions occur when we're at minus 20, and even more so when you're at minus 40. And right now, the Philadelphia Fed Diffusion Index, a measurement of work activity, is at minus 4, so not in the range to expect a recession. So just to clarify, we will get a recession. We always do. It's probably not coming this week or anytime soon. Know your news and earnings. Lots of Fed heads on the left. We got the Fed Beige Book this week. On Frank News, it's a lighter week besides that factory orders, job openings, ADP employment, and jobless claims for monthly unemployment report or employment report on Thursday, June 5th, rather, and then the full employment report on June 6th. So you got jobless on Thursday and the monthly unemployment report on Friday. So, yeah, a lot of news, but I'll put it on medium impact. And although there's still quite a few of earnings left, they're starting to head down. Now, the thing that bothers me is I looked at a lot of stocks that looked interesting to buy. I thought that Guidewire was setting up nicely, but you can't buy something right before. I can't buy something right before earnings unless I've got a good edge. And the same thing with Broadcom. It's a judgment call to hold stocks over earnings dates. In my opinion, it's bad judgment to not know when your stock's earnings date is scheduled. All right, on to the charts. So this sheet here is, to me, it's the cover sheet of Market MRI Pro. The data in Market MRI Pro is pushed out on a real-time basis. However, it's not streamed. So when you open up a window, you'll get the current data. And if the window's open and you want to update it, you just hit this thing up here. And I use it during the market hours, and it will update in a matter of 2 or 3 seconds. What we could see on Friday was a relatively flat day where nothing was plus or minus 1%. The volatility led up 0.5%, closing in the bottom of its range. And the Bitcoin was down 0.88, below the middle of the range. The diamonds were up 0.09. The rest of the ETFs of the markets were down up to 0.5 on the Russell. If we look at a 5-day change, you can see the spiders were up 1, Q's up about 1, diamonds up about 1, Russell's just under 1, and then the dollar was down 0.44, volatility down 2.3, and Bitcoin was down 5.96. After getting to a point where the new highs minus new lows were positive on both the NASDAQ and the NYSE, we dropped the NASDAQ, so the NASDAQ is negative, the NYSE is positive. If I look over here at a 1-day change on the S&P sectors, utilities, staples, communication service, financials, healthcare, I would say that that is more defensive than it is offensive. And if I look down here, I see tech, discretionary, and energy. Certainly tech and discretionary are not defensive, and those were the ones that lagged. If I look down here, you could see certain ETF families that were working well: solar, tech software, clean tech, cybersecurity, gold miners, Dow Jones Internet, cloud computing, aerospace. So even though the Q was down, it was down just a teeny bit. Now, these are some of my favorite ways of looking at breadth, and this is the stack over here on the right. And each index, we look at sector percentage up, industries up, advances up, and percent above the midline or the Bollinger Bands. The blue is the current bar, the gray is the previous days. You could see 45% of sectors, 48% of industry groups were up on the S&P 1500, while advances were only up 38%. So that means the majority of stocks, 62%, so 930 stocks out of 1,500 were down. And it was a worse performer than on Thursday. The NASDAQ, similar 55% of sectors, but only 41% of industry groups were up. And the NASDAQ, similarly to the S&P 1500, only 35% were up. So that means 2/3 of the stocks in the NASDAQ were down. And then the NYSE, 64% of sectors, higher than the others, 47% of industry groups, but only 38% of stocks. So you have a theme there. The majority of stocks were down on Friday. Now, I do a number of different ways to evaluate the market. I have a timing model, which is this line underneath the charts, and we had a bullish change where the Dow, which had been bouncing back and forth, turned bullish again on the weekly. The Russell is close. It'll have to get above 207.07. On the daily charts, you could see that all the dailies are in a bullish move. So dailies, short-term are bullish, intermediates are mostly bullish. That makes me more bullish than bearish, although I do recognize that we've run a long way. I'm not ready to short the market yet, and I think a pause or a sideways move here would be just fine. If we look at the U.S. index ETFs, you could see after a really massive run-up, spiders are going sideways. And on Friday, it was down just a bit, 0.11. Qs are going sideways. On Friday, it was down 0.16, putting in a hammer at the 17. Now, this one's different. The diamonds are going sideways after a run-up, but they can't get above the 200. And on Friday, they were relatively flat, up 0.09. And then the Russell also, for the most part, going sideways. The VIX is going sideways, and the dollar continues to be weak. If we flip very quickly and just look at weekly charts and see if there's a different story that we might see, we're not. We've had a couple of weeks consolidation. If we look at commodities, especially with the dollar coming off a recent high, although it's still way low in the pattern, let's take a look. You can see the dollar here tried to rally and it's pulled back. If we look at commodities, gold consolidating after a run to all-time highs, as is silver. Oil can't break above the 50. Natural gas is now stuck below the 200. And we could see on Friday a minimal movement in the 10-year minus 0.18, and in the 30-year positive 0.12. So mixed performance on the rates, but really not much of a move. If we look at the buckets, and for those that haven't been here, these are taking the percent B of every stock in a market and realizing that percent B can run between 0 or 1, making 10 deciles of 10% each, and then looking at how many build up above or below. We have moved to a more bearish-looking pattern than we did early in the week, but we still have very few stocks below or above the Bollinger Bands. I would say no signal. If I look at my market breadth tool, you could see the NYSE on the left and the NASDAQ on the right. You could see a reversal candle on the NASDAQ, the NYSE trying to trade higher and try to perhaps take out a flag pattern. Underneath, you could see in green stocks above the 20, white stocks above the 50, red stocks above the 200, and pretty much on both the NYSE on the left, the NASDAQ on the right, the breadth here is E-sum. When we look here at the left, again, the NYSE, new high, new lows, positive on the NYSE, not on the NASDAQ. AD lines were down on both. And up-down volume, interestingly, was positive on the NYSE, but not the NASDAQ. So I now stop take a breath, and ask myself, what am I seeing in the U.S. markets and what is my expectations? Well, I'm heavily influenced by my timing model, which still says I could go long. I think that the markets are in a tenuous position. And let me just show you what I think is really interesting. My buddy Sagar Nandi, SuperiorProfit.co, has an automatically generating trend lines. And you could see we've got a wedge that's really contracting on the spiders. We have nice support here on the Qs. We have sideways movement on the diamonds and sideways moving within a wedge on the Russell. So I think we're really getting to a point that this market is going to declare itself, whether we're going higher or not. But notice all of them have support, although some have resistance right above it as well. The ratio charts gives me a sense of looking at the individual sectors except for Bitcoin and in a ratio chart with the spiders. So you could be up on the day and look negative because you underperformed the ETF of the spiders. So if we look at Friday, we could see improvement in staples, improvement in utilities, improvement in real estate and healthcare holding up. What do they have in common? They're defensive. Communication actually turned up. We're trending down on discretionary, trending down on technology, but they haven't given up the boat, so to speak. So let's go into my favorite place, which is, in the program, it's called the JAS layout. Now, I work with what I call the JAS list. You have various lists that you can use across the top, and we'll take suggestions and add additional lists. The JAS list is sort of my big garbage can filled with stocks. It's got the NYSE, the NASDAQ, the Amex, and it's filtered for $1 and 500,000 shares. And right now it's got a little bit over 3,600 stocks. Each of those 3,600 stocks is assigned to a sector and an industry group. So if I dropped here and go to top down, they're now going to influence what we see in the sectors and the industry group. To be very clear, these are not the S&P 500 sectors, but rather they are the they are the sectors as built from the ground up from the stocks in the JAS layout. So if we look at by percentage change on both of these, excuse me, like the most tiring week for me of the year. So it's all right. We've ranked them there. Let's rank these as well. So the leading, and we said it's defensive. We saw communications picked up as well. So let's look at defensive, communication, and utilities. That gives me 424 stocks. The next thing I like to do is look at the industry groups within there and take the top 10. All right, now we've brought the stocks in from the top 10, and you can see we're down to 243. Since I won't buy less than $5 at 500,000 shares, why don't we put those filters on? Hit OK. So there's only 153 stocks in the top 3 sectors that meet my criteria, and let's rank them by bullish impulses. So let's just take a look what we see. Stars Entertainment. This must be a new launch. Nice little base here, but not very long in a breakout. It's an IPO, and you could see here the EMS is in a buy signal. It had a CPR signal, which is a short-term trending change, a gap of volume in a breakout. Relative strength and OBV look good. I don't know enough about this to look at it. Spotify has been doing great and certainly is a leader. You let a little bit of a congestion, and look at what happened on Friday. We had a CPR fired, and then you had volume breakout momentum from a squeeze. Relative strength and OBV coming up. I think Spotify looks good. Pegasystems, I think PEG. Yep, Public Service Enterprise Group. Yeah, it made it here because it took out the 50 on massive volume, CPR, volume, breakout momentum, relative strength, and OBV looks good. I wonder if they had earnings, and we could see their earnings were 430. So I don't know what happened here. And their earnings are all over the place. It's a utility. So I might go back and, well, I think I'll leave that alone. So you can see, not my kind. If it was breaking out above the 50, above the 200, I'd be more interested. Costco, I think this is overpriced, but I think it probably goes higher. And I have some, and I think Costco here looks interesting. Earnings are out. You had a flag and then a breakout, massive volume, CPR, and volume breakout momentum, relative strength, and OBV looks good. Is Walmart a poor man's Costco? Kind of. I think Walmart looks interesting here. UVV, I did notice a lot of insurance companies were looking good. I can't remember what Universal Corp is. Nice move, up 10% in one day. Southern Utilities, SO, run up, pullback. Excuse me, breakout above the 50 on massive volume. Was their earnings? Nope. And they pay a 3.27 dividend. That kind of looks interesting, and one that is kind of boring, and boring is good during market volatility. Here's another beautiful chart, Sprouts Farmers Markets. Now, I think it looks actionable here. My only hesitancy, volume, breakout momentum, volume, good relative strength OBV, is this going to be a double top, and do we need to be concerned about? In fact, talking about double tops, we're nowhere close on the major indices, but that could be how this resolves as well. I don't want that one. Others that looked interesting, Coca-Cola. I mean, if I just want to go on the pattern of technicals, there's always a little bit of a wake up after you switch windows. Coke is going sideways. I don't think it's ready to buy now, but kind of looks like it's setting up to go higher. Wisconsin Energy Corporation, WEC, also looks like it's pausing to refresh. Palo Alto Networks, PNW. Actually, I'm sorry, Pinnacle West. Capital, it's late, I'm tired. Pulling back, not yet ready. Netflix, the best stock in the market right now, or one of, basing at a big high. So that's top-down investing, folks. Make your opinion on the market, get an idea of what industry groups are leading, and then look for the top stocks and the top industry groups. Because as Ian Woodward used to tell us, when the wind's at your back, meaning the market's going with you, it's time to attack. Now, that's top down. I also like bottoms up. So the impulse is, if I put on those two filters, it's 2,000 stocks. So I've got a built-in scan I call my 2-day momentum. This has been really working well. Here's that PEG again. I mean, I'm sure it's a wonderful company and all that. I just prefer to buy things above the 200. R&R, Renaissance Holdings. See what the dividend is. Dividend is very small. You could see kind of steady earnings, not anything exciting in the recent report. In fact, they lost money. I might do research, but I'm not really interested in that one. And then there's that Stars, which I think is setting up beautifully. I just want to know more about it before I chase it. So we can also do some other things. For those that you used to watch me on Wealth Charts, how about I look at pullbacks and uptrend? Price 5, volume 500, hit OK. And these are all of them that made that. Let's rank them by up dots. And let's just go through very quickly. TRP. DC Energy Corporation. Does it pay a dividend? 5% dividend. Okay, that's interesting. Steady earnings, although not much on surprises or beats. Palantir. saw somebody who was worried about it when I was reading through, but it's not hard for me to see that it just broke out from a full flag. Downside is it's getting extended, but by math, it's not extended. So I think Palantir looks interesting. NVS is one of the stronger pharma companies. See if we can get that to work. Novartis. And you can see Novartis is breaking out from CHOP. GFL, Environmental Services. Nice uptrend, a little bit loose, starting to move. We looked at Costco. I'm see if there's anything else. Unity Software. This pattern looks interesting. It does reverse when it gets too high, and it's getting there. So I'd look at, let's see what happens if this pulls back. And I'm just looking up here. Here's Palo Alto Networks. It was up 6%. Kind of a sideways mover. All right, so I've used those. What else can I do from a top down? Well, how about, let's kill all this. If you want to look for something with a multi-time frame buy, put on your price and volume filter, and let's go look at weekly bullish reversal. And again, a fair number of stocks, and one of them I like is right up at the top is ULTA. The problem with this, it sort of went too far, and I'm not sure that I would chase it. Now, several of you bought from me my TradeStation package, and you might be asking yourself, well, how do I do all this on TradeStation? Let me show you a secret. In TradeStation, see if it's ready for prime time yet. Not the one. This is the one. Nope. How about this one? Yep. All right. So I've ran all my indicators on a large list of stocks, and then I can filter those and look for stocks that might be attractive now. So open. Pull this so we can see it all. I want pullbacks and uptrends with a few breakout. I'm going to hit OK. And these are stocks that made the list. There's Novartis. Arthur J. Gallagher's Insurance. Well, it's okay if TradeStation sets me down, just not my own program. Here's that GFL. Let's take a look at GWRE and Brothers. Yep, that's the problem with TradeStation. DWRE and Brothers. Here is Guidewire. Decent uptrend, but it's got earnings this week. And Brothers. Except they need B. Here we go. Looks great as well. So if I guess I had to summarize it, some of my favorite stocks, and let me just curiosity. Brothers breaking out above that trend line. Sprouts Farmers Market breaking. Hold on a second. Let's go look at it. SFM. One second. I worry about the double top, but this one also looks interesting. And I think we could argue that it too is taken out its bull flag. So those are two that I like the most. Costco, I think, looks interesting. Brothers may be my favorite of the bunch. And let's see if there's anything else I'd want to show you. So we looked at Sprouts Farmers. We looked at Brothers. I think we're good. So what I wanted to show you, in 30 minutes, which included 5 minutes of me bantering at minimum, and includes teaching, I've done a deep dive into the status of the market. I have my comfort level, whether I want to be long or short, and then I just did a couple of things on the breadth to reassure me, looked at the leading sectors and industry groups and went for the stocks and the leading ones. And then I flipped the script and I did it from a bottoms up. One I like, but it makes me nervous as a company, is HIMS. Anytime you can make something available at a lower cost, it's great. And they were a place that worked with compounding pharmacies with Ozempic, Wegovy, and Mounjaro. I like this pattern a lot. And again, it's a flag, and we might be getting ready to break out of it. I just fundamentally, I want to like this. Look at the change percent. Look at surprises, even surprises some on revenue. This is a stock that basically is allowing a patient, as I understand it, to reach with an online provider in a lower cost vehicle and get a prescription for some of the weight loss drugs, etc. Nothing wrong in healthcare when you can get something done cheaper with a licensed physician. The question is, can they compete with Walgreens and CVS? And will they continue to get access to supply? I think that also looks good. So I've babbled. I'm tired. I've yawned. I'm sorry. I've made nose noises. I'm sorry. But what I have done is I think provided some good free analysis of the stock market and reminding you I am not a pro. I work for a living. I trade because I like it. And we'll see you during the week. And for the stocks and docs, Wealth Charts crowd, look for something Monday morning. Thanks, everybody.